Okay, so now let's come to next section in duty drawback, section 75. Section 75. Now, what is this section 75? What will happen over here? Here, I have imported the goods. I have done the manufacturing on those goods and I have converted into finished goods and I have exported the finished goods. Difference 74, you export as such. 75, you convert it, you transfer it, transform it, and then you export it. That comes under section 75. Am I clear? The drawback, I hope you're with me. Drawback on imported materials used in the manufacture of goods which are exported. Drawback on what? Imported materials. The materials which are imported, on which you have paid import duty, and now you have converted those goods into finished goods and exporting that finished goods. So now the question which is coming over here is drawback of the import duty which you have paid on imported goods. Am I clear? Imported materials. What is export over here? Export means taking out of India to a place outside India or taking out from a domestic tariff area to a SEZ. We know that SEZ is considered to be a place outside India for tax purpose. So in section 75, if you're taking a good from DTA to SEZ, DTA, domestic tariff area to SEZ, that will be equivalent to export, and in that case you will get the benefit of section 75. And third is stores. Third is stores. Am I very clear? It's very important to know the definition of export because then only will be eligible for duty drawback. The first is taking to a place outside India. Second is stores, which we all know. Stores to which vessel? A foreign going vessel. And third is what? Taking from DTA to SEZ. DTA is domestic tariff area. SEZ is special economic zone. Special economic zone is for tax purpose is considered to be a place outside India. Am I clear? Am I clear? Can I go ahead? Now, allowability of drawback in case export goods get destroyed in transit. See, understand, we know India is up to territorial waters, up to 12 nautical miles from the baseline. India is up to 12 nautical miles from the baseline. I hope you're with me. Yes, and assume the goods get destroyed once they have crossed the territorial waters. Suppose the goods were exported. The moment goods cross territorial waters, goods are exported. Export is complete. Export is complete. We've already learned the definition. We've already understood the definition of export in chapter 1. Export begins when you give the shipping bill of export, and export is concluded when the goods cross the territorial waters. So when goods have crossed territorial waters, goods are exported, and while in transit, after crossing the territorial waters, if goods are destroyed, then in that case you are still eligible for duty drawback. Am I clear? See, India includes territorial waters of India. When the export goods are destroyed before they cross territorial waters of India, they are saying will not be regarded as export, being the goods didn't move out of India. Until and unless goods have not crossed the territorial waters, the goods are in India only. That means exports are not done. Exports are not done. So if your goods get damaged, destroyed within India, so no export. No export. So question of duty drawback does not arise only. In case the goods are destroyed in high seas, that is beyond territorial waters of India, the same shall be eligible for drawback since the export is completed. I hope you're with me. Once the goods have crossed territorial waters, export is completed, and then the goods get destroyed, you are still eligible for duty drawback. Am I clear? Can I go ahead? Now, meaning of drawback in section 75. Drawback in relation to any goods manufactured in India and exported. You manufactured and then exported means the rebate of duty excluding IGST under section 3 subsection 7 and compensation cess leviable under section 3 subsection 9 of custom tariff act chargeable on any imported material or excisable materials used in the manufacture of any such goods. In short, if you are importing materials and have paid import duty, you will not get the drawback of 3 subsection 7 and 3 subsection 9 as per section 75 as per notification number 88 by 2017. Am I clear? Am I clear? Understand, every section has your own definition. So 74 had its own definition of drawback. There 37 and 39 was part of drawback. But in case of 75, they are saying that 37 and 39 will not be a part of drawback. And honestly, in 75, what is going to happen? See, you have imported material, you have converted into finished goods and then exporting. So it's difficult to judge the custom duty. So what are they going to do is they'll be giving us rates, AIR rates, brand rates, special brand rate. AIR means all industry rate, brand rate, special brand rate, percentage or value. Suppose they're saying 10% of the FOB value of export. 10% of, I'm just giving an example, 10% of FOB value of export. So they're saying 1 lakh is export, 10% of 1 lakh is 10,000, which will be a duty drawback. So here I am not going to link with exact what I've paid. Here they have given us a percentage and you have to take that as a duty drawback. Am I clear? Can I go in? Next, notified goods. Drawback is allowed on goods which are notified by central government. 75 is not eligible on all the goods. The one which are notified are eligible for section 75. Next, manufacturing process or other operations must be performed. To cover under 75, form need to be changed. Manufacturing need to be completed. So what's written over here? Such goods must either be manufactured or processed in respect of which any operation must have carried in India. Am I clear? Next, order for exportation by proper officer. Now, what export will be considered in 75? Normal export under section 51 and post. Here, baggage is not considered under 75. Baggage is considered only in 74. Am I clear? So what's written over here? Such goods must have been entered for exportation and the order permitting loading thereof has been made by proper officer under section 51, or they must have entered for export by post under section 82. That means export under normal export and export by post is eligible for duty drawback under section 75. Am I clear? Duty drawback of custom duties to be allowed. The drawback of duties of custom chargeable on any imported materials of a class or description which is used in the manufacture or processing or in carrying out any such operations on such goods shall be allowed. You have imported the material, you have paid import duty, and then those materials are used for finished goods, and those finished goods are exported, then that material, whatever import duty you have paid, you are eligible as duty drawback. But again, I'm saying in 75, you have to apply the rate given by them. Okay. Next, no drawback to be allowed in case of negative value addition. See, I have imported 1 lakh rupee material and I'm exporting worth 80,000 only. That's negative value addition. If you're importing, converting into finished goods, there should be positive value addition. So what's written over here? If the export value, see the language, if the export value of such goods or class of goods is less than the value of imported materials, if export value is less than value of imported materials, then you are not eligible for drawback. Boys, section 75 will be studying many things where you're not eligible for drawback. The simple what they're trying to say over here is, if your export value is assume 1 lakh rupee and what you had imported the material is 1,20,000. That means your imported value of material has more value than export value. Then this is negative value addition, and in case of negative value addition, no drawback is there. Then there will be something called as minimum value addition. Minimum, assume that it's given the question that whatever you have imported, 40% should be exceed. That means there should be a value addition of 40%. That means suppose my import is of a lakh rupee, then my export should be at least 1,40,000. There should be a value addition of at least 40%. So assume in the question they have given that there should be a minimum value addition of 40%, right? That means if imported materials is 1 lakh, the export should be at least 140. Suppose in the question it is given the import is 1 lakh but export is 120. But export is 120. Now, this is a value addition, no doubt about it, but is not satisfying the condition of minimum value addition. Then in that case, you will not be eligible for duty drawback, because though it is a positive value addition, but is not sufficing, not satisfying the condition of minimum value addition of 40%. So you will not be eligible for any duty drawback over here. Am I clear? Am I clear? Next, sale proceeds to be realized within the period as specified in FEMA. Boss, here in section 75, they are following FEMA. They're saying whatever is given in FEMA, you have to follow that. So what is written over here? The sale proceeds in respect of such good on which drawback has been allowed have to be received by the exporter or any person on behalf within the period specified under FEMA. If such sale proceeds are not received within the set time limit, such drawback shall, except under such circumstances or conditions as central government may specify, be deemed never to have been allowed, and procedure for recovery or adjustment to the drawback will be initiated. I hope you're getting my point. What they're trying to say here, you have to follow FEMA. So if you're not getting the money as specified within the time period in FEMA, in that case we'll assume that export is not done, so duty drawback is should not be there. So if we have given you the duty drawback already, we will start the recovery proceedings or the adjustment procedures. Am I clear? Am I clear? Can I go ahead? Then here also we have rules. There we have rules. Here also we have rules. Customs and Central Excise Duty Drawback Rule 2017 has been framed by central government, in accordance of which duty drawback will be allowed. So here they have the rules the way we had rules in section 74. Same way we have rules for section 75. Am I clear? Okay. Identity of goods exported. See, in 74 it was very clear that whatever you have imported, that should be only exported, because we were not changing the form. But here we are going to change the form. So here identity is not the criteria at all. There is no criteria of such identification, since the inputs are manufactured or processed before they are exported. Am I clear? Am I clear? Am I clear? What's next? User criteria. The goods manufactured from imported material is used in India and subsequently exported, then no duty drawback shall be allowed. Mark this important. Subject to such exceptions. Okay. Normally what they're trying to say, in 74 you were allowed to use and then export, you were eligible for drawback at some less percentage. Here, if you are importing raw material, converting it into finished goods. If you're importing raw material, converting it into finished goods, I hope you're with me, and then using it and then exporting it, you are not eligible for duty drawback. In section 75, converting, using and then exporting, duty drawback is not the criteria. You won't be allowed. So what is it over here? If goods manufactured from imported materials are used in India and subsequently exported, then no duty drawback shall be allowed. Am I clear? Am I clear? Can I go in? Now, rate of duty drawback. Duty drawback is allowed as per all industry rate, AIR rate. AIR rate notified by the drawback directorate. In case if no rate is notified, then the exporter can apply for brand rate. Understand? Normally you have to go for AIR rate. Normally you have to go for AIR rate. But if AIR rate is not specified in your case, if AIR rate is not given, then only exporter can apply for brand rate. If AIR rate is given, then an exporter cannot apply for brand rate. I hope you're with me. What is it over here? In case if no rate is notified, then the exporter can apply for brand rate. Am I clear? If not given, then only brand rate. If not given, then only brand rate. Am I clear? And in case if duty drawback as per AIR is less than 80% of duty paid on importation. For example, I had paid 1 lakh rupees as import duty. I had paid 1 lakh duty as import duty. Am I clear? And the AIR was given, suppose 60% of FOB value of export, or 60% is too high. Let me reduce it to, suppose, 10%. They are saying that your FOB value of export 10% would be your AIR rate. I hope with me. Now assume my FOB value is around 7 lakhs. My FOB value is around 7 lakhs. FOB value is around 7 lakhs. So 10% of 7 lakhs come to 70,000. Now, I was eligible for a duty drawback of 10% of FOB value of export, and FOB value of export is 7 lakhs, 10% which comes to 70,000. What I had paid was 1 lakh rupee. What I'm getting as duty drawback is 70,000. That means I am getting less than 80%. 80% is 80,000 rupees. 80% is 80,000 rupees. Now, if you are getting less than, not 80%, less than 80%, if you are getting duty drawback less than 80%, then the exporter can apply for special brand rate. In this case, you can go for special brand rate. In this case, you can go for special brand rate. To understand, normally you have to go for AIR rate. This all rates will be on the value of export, FOB value of export. So normally you go for AIR rate. If AIR rate is not given, then only you can go for brand rate. It's not that you feel, oh, no, AIR rate is less, so can I go for brand rate? No. If AIR rate is not given, then only you can apply for brand rate. And if your AIR rate, whatever money you're getting drawback, is less than 80% of what import duty you have paid, is less than 80% of what import duty you have paid, in that case you can apply for special brand rate. But boss, I'm getting not even 80%, so I don't want this AIR rate, give me a different rate. Am I clear? Can I go ahead? Then we'll be going in depth. I'm just giving an overview as of now. Next, time limit for exportation of goods. 74, we had a time limit of 2 years in case of import, and as such exported. Then imported, used for business purpose was 18 months. After 18 months, no drawback. In case of 75, there is no time limit at all. You can export at as much time as you want. Then export year does not include baggage. The goods cannot be exported as baggage. That means if you want, you go for baggage, but you won't get duty drawback under section 75. Am I clear? So this is section 75. 75 is saying you have imported the material, you have converted it into finished goods and then exporting the finished goods. So you are eligible for duty drawback under section 75. Am I clear? Can I go ahead? Then we said, okay, how to calculate the duty drawback rate? How to calculate? They have given us how many rates? 3 rates. AIR rate, brand rate, special brand rate. AIR rate you have to accept by default. If AIR rate is not given, then you go for brand rate. And if AIR rate is given, but the amount of drawback is less than 80% what you have paid as import duty, then you are eligible to apply for special brand rate. Am I clear? So now let's go to rules. Again, the way we had rule for section 74, same way we have rules for section 75. Customs and Central Excise Duty Drawback Rules 2017. Again, Rule 1 would be the name of the rule. Rule 2 will be the definition. So directly come to Rule 3. Rule 3. All industry rate or drawback may be allowed on the export of goods at such amount or at such rate as may be determined by central government. Central government keeps on updating the AIR rate. Why? Because if import duty rate has changed, so I will be paying more. I will be paying more duty. When I'll be paying more duty, I'll be eligible for more duty drawback. So things keeps on changing accordingly. They keep on updating or keeps on changing the AIR rate also. Factors considered while determining the amount or rate of drawback. That means factor considered while determining the AIR rate. In determining the amount or rate of drawback under this rules, the central government shall follow this all things. First, average quantity or value of each class or description of the material. How much quantity? To know the rate, I should know how much material is required, how much waste will be there, all those things. What is the rate? Average quantity or value of each class or description of materials from which a particular class of goods of ordinary produce or manufactured in India. Average quantity or value of imported materials or excisable materials. Average amount of duty paid on imported and excisable materials. Average amount of duty paid on materials wasted in process of manufacturing and catalytic agent. So these are the ways where I will come to know, okay, this much amount of material is required to make this goods. So if this much is required, so how much you must have paid the duty, and accordingly they calculate the AIR rate. Am I clear? Am I clear? Can I go ahead? Can I go ahead? So is Rule 3 clear? Rule 4. The central government may revise amount or rate determined under Rule 3. You have to keep on revising AIR rate because scenario keeps on changing. Rule 3. Rule 4. Now Rule 5. Relevant date. Now question comes, on which date AIR rate I should consider. Am I clear? Relevant date for determination of rate of duty drawback. This rule also provides a relevant date for determination of rate of duty drawback. First, in case of normal export, the date on which let export, see we know that section 75 you have only two type of export, normal export and export by post. So the day I am exporting, the day I get let export order or let ship order under section 51, that date AIR rate I have to consider. And in case of export by post, in case of postal export, the rate of drawback shall be the rate applicable on the date when exporter has handed over the goods to the postmaster. When exporter hands over the goods to the postmaster for an export, that date AIR rate will be considered. Am I clear? This is Rule 5. Am I clear? Am I clear? Now Rule 6. Brand rate. When will brand rate come into picture? Cases where AIR rate has not been determined. When AIR rate is not given, then only you can apply for brand rate. So if not AIR is specified, the manufacturer has to apply for fixation of rate or amount of drawback within 3 months of the relevant date as specified in Rule 5 above. See Rule 5. let export order. The day you go for get let export order, you go for AIR rate and you come to know that for me AIR rate is not specified. So you will have to make an application within 3 months from the date of let export order, that in my case no AIR rate is given. So please give me a brand rate. Can I go ahead? Here any problem? Can I go ahead? Okay. Can the rate of drawback be granted provisionally to the exporter with the amount or rate of drawback has not been determined? That means, can I get provisional brand rate? Can I get provisional brand rate? Let's read this. The exporter may be granted provisionally duty drawback when executes a bond binding himself to repay the entire or excess amount of drawback, where an exporter desires that he may be granted drawback provisionally, he may make an application in writing to Principal Commissioner of Customs or Commissioner of Customs, as the case may be, that a provisional amount be granted to him towards drawback on the export of such goods pending determination of the final amount of drawback. The exporter may be allowed provisional duty drawback and an amount not exceeding the amount claimed by him. Whatever amount he has claimed, that is a maximum provisional drawback he can get. However, it is noted that rate of drawback is determined provisionally only when exporter intends to get brand rate of duty drawback for his export. This provision has no applicability when the exporter intends to get duty drawback on the basis of AIR. Because AIR, it's already there. So question of provision does not come into the picture. Provision comes only when AIR is not there. Brand rate you have applied. You have applied 3 months application. It will take everything. So provision will be applied only in case of brand rate and not in case of AIR. Am I clear? Sure.